I used to suck at scalping. Like I just couldn't do it. I didn't know what I was doing. If you're struggling with scalping, then this video is for you. I had people enter into the contest by commenting a video that they would like to me make. Over half of the videos were asking for a review of this strategy that I post on Twitter all the time. This is the strategy that I use for scalping. I use it to enter trades on low time frames. The reason this strategy works so well is because the system and strategy I'm about to show you, IPTA, the algorithm that controls price, ICT, the inner circle trader, has taught us, notes and respects the lows. The algorithm will defend it. Step one, you're going to look for a fair value gap that's been filled. Boom. There's a fair value gap that has been filled. Once you have seen it filled, you're going to check to make sure that it is in fact a low that has formed there. What do I mean by low? It comes into it and at least one bar enters the fair value gap, and then you see a 2-2 reversal. What is that? A 2-2 reversal is a break of the second candle. So it's candle number one. The second candle breaks number one's high. There you have your 2-2 reversal on this example. Boom. Step two, you're going to draw a line on that low that filled it there, and then you're going to wait for that to be broken. You must see a close below the line. That's very important. A lot of times price will just wick below it, and then it doesn't offer a good scalping opportunity. Step three, find an imbalance on the leg down that broke the intermediate term low. What is the intermediate term low? It is a low that filled a fair value gap. That is the only definition of intermediate term highs and lows you need to know. The others offer us traders no real edge. There is a small fair value gap there. Now, the last part of step three is to wait for price to retrace into the imbalance, offering you an entry. Boom, there's your entry. You would enter short there. Place your stop somewhere within your risk limit. Mine would be on NQ in this example would be 6 points with 2 contracts, equaling about $250. This is for the traders that want to learn it all. They want to be like really advanced in price action. Then this is for you if you just wanted a quick explanation of a strategy you can immediately use. That was steps 1 through 3. This is the nuances that I've been asked a lot of questions about in the comments and on Twitter. The reason this strategy works so well is we're going to let the market tell us what's up. We're not going to guess. This strategy will tell you exactly when to enter, and that's why it works so well. Part of market mastery is realizing that we don't control the market. We only can go with the market. Fighting the market is never going to be beneficial. Do you need a bias for this trade? No, you don't need a bias, but you do need to know where the liquidity is at. Liquidity rules all. That's why the market moves most of the time. Other than that, it's just to fill in an imbalance or to induce traders to play stops. Let's go to the 1 hour for that. The 1 hour is my favorite time frame to find imbalances. Why? Because it offers really good double bottoms to target as draws on liquidity. So there is equal lows right here. Let's go ahead and mark those off. And then there's also another set of equal lows here. And then this is also an RTH gap in gray. Right here, that's an RTH gap from this candle to that candle is a gap. There's also a second one here. Now we know that these equal lows are going to act as magnets for price, and they're going to draw price downward. Now that we know we have these liquidity points, and that is likely where price is going to be heading to, bias done. You do not need a daily time frame bias, but it is going to help you make the best trades possible, knowing where the market is going. Is it absolutely needed? No, because the way that we're going to trade this is going to show us all that. All right, it is 9 a.m. right here. Now that you've entered short, you know where your stop's going to be. The best way to scalp this strategy is on low time frames under a 3 minute. And NQ is a great product to trade it because it moves really fast, and each candle with 2 contracts is about $300. I'm going to exit my first one. My first scale out of 1 of 2 contracts at 1.5 times my risk. My risk is 6 points. So I'm going to exit my first one at around 10 points. I entered at 99. Let's go to 89. So I'm going to exit right there. Boom. There's my first exit. And then my second exit is going to be at least 2 times my risk. I risk 6 points. So 12 points would be about there in this area. But let's target the low of this candle right there. So the price is going to bounce. That's where it's going to bounce at. Then price retraced up into here. That would have been a good opportunity to add back what you sold. There, I would exit there. Now that's $500 in less than 20 minutes or so. The algorithm leaves clues, and part of mastering any strategy is realizing that we can find the clues that the algorithm leaves behind. So price has dropped down past that point we noted and tipped into the fair value gap into this mitigation block here. Now we're going to let the market tell us what's up. Let's go forward. Prices filled the fair value gap. If we get a break of that right here, you had a fill of fair value gap, a drop down, a break of the intermediate term high. Now we are bearish, right? But the market just signaled to us short term it is bullish. It might be going to up to here to test this intermediate term high, which is wick that filled the fair value gap is a ITOB on a lower time frame. So I would expect price to come up into there to fill it. How am I going to enter? Because if I stay on the 3-minute, I'm going to miss this move up. Let's drop down to a 30-second chart. So there you get your close above it. You get a test here. I would enter right here as that new candle opens, betting that it won't go below that next blue candle. This is price spooling. You can enter and trust that the lows of these candles will hold. What do I mean by that? Because the bottom of here to the bottom of this is not going to hit the bottom of that, and it's not going to hit the bottom of that. Still one time framing up. The bottom of these candles will not be closed below. So let's say you entered there and then target your first scale here, second one there. It's still one time there. The one time framing broke. You could add back one if you sold here. You could add back there, and then target reached. Let's go back to the 3-minute. We know that that is just a short-term retracement to fill the imbalance and to test this high here. And this is also coming in close to 9 o'clock. Okay, clues. I don't know how many times I've got to say this, but you need to look for the clues in price. Let price speak to you. Let the narrative unfold, and do not trade this strategy for more than 45 minutes at a time. You do it longer than that, you're going to start making mistakes. All right, I know that's an ITOB, and I know this wick is likely to hold. I would enter short there, and then I would target my first scale out there, my second there, and then I would call it a morning until after the AM. So boom there. And then you have a fill of a fair value gap. Always mark these wicks off that fill fair value gaps because they're likely to be retraced to and offer support. Now we're right at the New York opening. I don't trade right at the New York opening. So boom. Right there, if you took that trade, the ITOB wick, you would have nailed it. Now at the open, we know that the price is likely to seek this liquidity. You can enter that however you like. You can drop down on a lower time frame. Let's go forward until about the time when I would start trading again, which is right around 11 o'clock. I find 11 o'clock is a time where the market likes to put in a reversal, put an afternoon rally. So we have 1 liquidity, 2, 3. It's taken out 3 sets of liquidity, and it's almost reached that RTH gap, which is right here. All right, now if I want to go long, because I know it's 11 o'clock, come up to 11 o'clock, I'm going to use the intermediate term market structure shift to help me do that. So there we have a fair value gap being filled, but I need to see a retracement like that. All right. Now, if I want to go long, I need to see this broken. Now, what are the clues telling me? You have 1 push, 2 pushes. There's your 3rd push down. That right there alone, that 3 push strategy alone can make you money. Add this into it, you got a killer strategy. This is also a daily low that it just ran right here. There we have a candle above it. Let's drop down to a 30-second chart. This down closed candle here should offer support going forward. If we get a retracement to this line, I would enter. You also have an ITOB wick there, so you need to be careful. It could act as resistance. See how you can just take the wick that was inside the fair value gap like that. That would have been close enough to me. It almost reached the close of the candle. I would enter there, and then I would target maybe up here. And then I would have got stopped out, right? Let's go to the 3 minute and see what this looked like, because it's a good example of a stop out. Okay, you had the break of the intermediate term high here. You get a retracement. Maybe it bounces here or maybe it doesn't. Let's see. It could just be coming back to this close of this candle right here. And then that could offer a support. Backtest and trust. That is something that I wanted to talk about real quick. So I struggled with this. I back tested it and I was really surprised by the win rate, especially in a trending environment. The win rate is over 70%. And then if you just do a whole gather of random days, random market environments from trend to consolidation to reversal type markets, it is 63%. I was pretty surprised by that. That's really good for a strategy. I kept fighting it and I would trade normal ICT concepts. And eventually I just became to the point where I decided I back tested this. I know it works. I know it works better than most of ICT's concepts that are super complicated and I have to spend a bunch of time analyzing the market and I don't feel as comfortable in them, right? The power of this strategy is that we're letting the clues that IPTA leaves behind, which ICT teaches about preaches about constantly. We're using the clues here. And this isn't a strategy that a whole lot of people know about yet. And the ones that do know about it are trading and having a lot of success with it. But the other ones, the closed-minded ICT guys that just, I don't know, I'm not going to talk shit about them. They're whatever. But they won't trade this because ICT hasn't told them to. I don't know why ICT doesn't tell anybody about this. I'm sure he knows about this. He has to. Especially in episode 12, he talks about order blocks and fair value gaps. I'm assuming he knows about this. I don't know why he's not telling anybody. What I would do is I would take this fair value gap. I would take that one short and that one, and I would continue to struggle. And then when I ignored this setup, I get stop out, and then I would still be trying to go short. So I target this fair value gap, even though I just had a intermediate term structure shift. I would still be wanting to go short there, ignoring the fact that this just happened. Then I'll go short here, put my stop above there, get stopped out again, and then I go short into the mitigation block here, and I get stopped out again, and the frustration would build. My suggestion to you guys is back test it and then trust it, because I promise you it is going to be a million times easier to trade than any other strategy you're going to learn. Just trust it, and I promise if you backtest and trust it, you can pass any funding challenge you want, and you can do this. If you watch the whole video, congrats to you. This is my website. It's verifiedfundingcompanies.com. I post the latest discounts for several different prop firms that I have traded with and been funded with. I just added Top Step. I just passed their evaluation and I'll be going into their funded account. They've changed their rules and I really like their new rules. I'm removing Lilu because I just never really cared for Lilu that much. They're an alright company, but they're not all that in a bag of chips. BlueNox has a couple options here. This one just ended today, the 85% off, but there's still this one until the 4th. Pretty good discount. Check it out. And then Apex, Top Step. And Top Step, if you want this discount, come to my website, click on the picture or down there. Is a 50K for $49 and then 100K for $99. What's cool about this is the activation fee is the same for all size accounts. So I thought that was pretty cool. And then you only need to trade 2 days for the valuation stage. Payouts are every 5 winning days that you have. And there's only one rule to fail you now, which is the overall drawdown. They still have a daily loss limit, but it just stops you from trading if you hit negative 1K for the day. And then you can trade the next day. And then if you want to learn more about the strategies we talked about, make sure you watch the video in the upper right hand corner.